Stock markets in Europe are trading slightly higher this morning, with the UK's FTSE 100 index currently up around about 23 points, while the DAX index in Germany is up just 14 points. The Euro Stoxx index is up by 3 points. In the currency space, the euro is ticking a little higher. It's up around about 132 after touching 133 in the previous session. The dollar is somewhat softer. However, we are seeing a little bit of an upside coming into the dollar after the Federal Reserve's beige book yesterday, which suggested that the economy in the US is improving, supporting the case for Federal Reserve tapering in September. And when it comes to other asset classes, gold is currently down about $4. Oil prices are ticking a little higher on the perceived threat of military intervention by the US, as there seems to be greater unification in the US between policymakers about entering Syria without the approval of the UN. And when it comes to bond markets, gilts and German bonds are tracking a little lower, with yields on the upside going for bonds and for gilts. Good morning, I'm Ishaq Siddiqi and welcome to your daily market bite. I'm going to give you a quick idea of what's going on in financial markets today. Let's start off with the overnight session in Asia. So we had a generally positive session in Asia, and that was on the back of two developments. One, we had a strong assessment by the Bank of Japan at their policy meeting. They left their policies unchanged, but lifted their view or their outlook of the Japanese economy, instilling some confidence about Shinzo Abe's economic framework. At the same time, we are also seeing the Asian markets respond quite positively to the high finish on Wall Street, with the S&P 500 closing up 0.8% in the previous session, and that was on the back of of course, like I said, the Fed's beige book, which generally pointed to more of an optimistic turnout of the US economy, and also at the same time, US car sales beat expectations on the whole on aggregate, and that also suggested a decent upswing in the US consumer recovery. Now, going into the European session today, of course, the main focus for us today will be the Bank of England and the ECB's policy meetings. Both central banks are expected to keep policies unchanged, with the Bank of England and the ECB keeping interest rates at record low levels at around 0.5%. With the BoE particularly keeping its asset purchase program at £375 billion. Now, both have a different story when it comes to forward guidance and policy. With the Bank of England, they're currently having to face the challenge of convincing the market that the forward guidance plan is the right plan. Now, we've seen a solid upswing in UK economic data, and that rapid acceleration in growth has got the market somewhat unconvinced that Mark Carney, the governor of the Bank of England, can keep a lid on rising interest rates going forward. Now, they put a threshold until late 2016 when they are looking to hike interest rates. However, the current 10-year gilt yield is pricing in a rate hike around about late 2015, a year earlier than the ECB, the Bank of England expects to raise interest rates. Now, I think the market is somewhat worried that the Bank of England will not be able to keep interest rates at record lows, just like they suggested they've suggested in their forward guidance measure. So investors will be looking out for an accompanying statement by the Bank of England when they announce their policies at 12 p.m. UK time. Over on the ECB side, Mario Draghi will have to strike a balanced tone where he's going to be confident about what's going on in the Eurozone. We are seeing a recovery. It is decent, but at the same time, it's nothing to get too excited about. Growth coming in at about 0.3% for the second quarter. It seems that the ECB may revise their forecast for growth and inflation slightly higher for 2014 onward, but on the whole, they're going to have to keep a very dovish tone, reiterating that rates are going to stay at ultra low levels for an extended period. They may provide some thresholds, that remains to be seen. They also could possibly hint at the idea of putting out minutes for each meeting, just like the Bank of England and like the Federal Reserve. Now, Other things to watch out for today is, of course, the US ADP employment number, which is generally seen as a bit of a precursor to the payrolls report, which is out tomorrow. The ADP is expected to show a rise of 180,000 jobs in the US economy and should instill some confidence that we are going to get a steady number tomorrow. If we do get a good number on the payroll side tomorrow, somewhere in the region between 180,000 to 200,000, that will really refuel the expectations that we are going to see some sort of tapering activity by the Federal Reserve in September, if we see a corresponding drop in the unemployment rate tomorrow below 7.4%, that's really going to hasten the Fed's resolve to start tapering. So the payrolls number could be the deciding fate of tapering, if it's going to happen early or not, if it's going to happen in September, or it could happen in October or December. Now, other things to look out for is, of course, the start of the G20 meeting. Now, traditionally, the G20 meeting is for leaders to discuss world economics and what's going on in the world when it comes to the financial system. However, this time around, of course, we know that there is a key concern about what's going on in Syria and the US proposing that they intervene by striking at Syria. Now, the UK has bowed out with Parliament going against David Cameron's plan to align itself with the US and France by entering Syria, and at present the US are looking for support to drum up. There is greater unification on the board of the US policymakers and lawmakers who would like to start an intervention sometime as early as next week. Congress reconvene on Monday. It's going to be thrown out to congressional support. If President Obama does get support from the Congress, we're likely to see a strike on Syria by the US. So that is keeping investors very nervous. At the G20, the expectations are we're going to see a greater divide between President Obama and Vladimir Putin from Russia. That is all for your daily market bite. Tune in for another one tomorrow, and we'll be discussing payrolls. Cheers. Thanks for watching.